For more now on the economic situation throughout Asia, we're joined by Ankur Patel, Vice President of Data Science at 7 Park Data. Welcome to the show. Thanks for joining us.
Thank you for having me.
So if you look over the past 12 months, which countries would you say were the major drivers of growth in Asia this year?
I think some of the larger economies, certainly India leading the pack, was very, very important. China, the Philippines, Thailand, and Indonesia. And largely that has to do with the fact that they are very large economies. They're less sensitive to trade fluctuations, whereas some of the smaller economies like Taiwan and South Korea, they have struggled and they will continue to struggle going forward.
You know, as you point out, there are things like trade fluctuations which could affect growth in these countries, but the region also suffered a number of natural disasters. We had earthquakes, several earthquakes, storms in Japan, a dam collapse in Cambodia and Laos, landslides. How have those affected the Asian economies?
In the short term, they were certainly very bad. I mean, you saw a direct negative hit to GDP just because you get the environmental damage and all of a sudden that infrastructure that you had built is no longer there. But generally with these environmental disasters, what you see is that in the next few quarters, as some of the reconstruction efforts take place, as there's more fiscal stimulus that's released to support some of the kind of the recovery aspect of the damages, you do see a little bit of a boost. So I would expect that going into 2019.
Now, what about progress towards integration in Asia? Have you seen any progress on that front?
I think we have. I mean, if you look at integration, there are two big critical things here. One is trade, and the other one is capital flows. And on both fronts, I think a lot of the integration has been led by China. And China in particular has been able to negotiate a lot of bilateral agreements with a lot of its trading partners in the region to allow greater investment both ways, from China to some of these economies and from these economies to China, and then also bilateral trade agreements to reduce tariffs in Asia. Unfortunately, with the U.S., that's been the big sore point globally.
And what do you think has been the impact of the trade dispute between China and the United States?
I think part of it right now is mostly due to sentiment, as well as some uncertainty around what the picture will look like in 2019. I don't think we've seen the real brunt of the effect yet, because you've seen a front loading of Chinese exports, just preempting the rise in tariffs. So the exports have done very well, but once the front loading of that export activity recedes, then in 2019, if there isn't a really good resolution to all of this, you will see not only China take a direct hit, but a lot of its trading partners that are part of that export chain to the U.S.
You know, you say a lot of this has to do with sentiment. In fact, one of our earlier guests said that as well. He referred to it as the psychological effect. But how would that affect global chains, sort of supply chains in that region?
I think what you start seeing is that businesses, because they don't like the uncertainty, because it's hard for them to make prudent business decisions, they will preemptively actually divert activity from China and base their activities in other countries, perhaps elsewhere in Asia, maybe in other parts of Latin America, for example, if there's a close substitute. And so what you see is that you already have a diversion of trade activity even before any of the tariffs take place. So you don't have to wait for the tariffs to take place for that economic impact to be felt. I think you're starting to feel that already.
And what do you see as the downside risks to the Asian economies moving forward?
I think there are a couple of big challenges. I think if you look at from a big global perspective, the fact that the Fed is tightening monetary policy is certainly crippling growth in Asia as well as in other emerging markets. I think that you're seeing global growth really slow down. I mean, it's not material, but we're in the late stages of a massive global economic recovery that began in 2009. And there is no cyclical leader when it comes to global economic activity. I think the U.S. has led the pack, but once the U.S. starts seeing slower growth, it's unclear who will pick up the pace. China obviously is slowing down. In a way, it's pretty dramatic, right? So it's 6.9% in 2017, 6.5% this year. It could be close to 6.2% next year. So that's going to hurt growth in emerging market Asia. And then finally, what you're seeing is that you're seeing some of the negative market sentiment take hold. And we're kind of still in the early innings of knowing what that will look like, but that's a big risk heading into 2019.
And what are the benchmarks or milestones that you'll be looking for in the coming months?
I think what I would love to see is U.S.-China the trade dispute get some clarity by March. If we don't have that clarity, I think we're in a little bit of a pinch. I would expect the Chinese economy Chinese officials in particular, to put in more easing measures to support growth, so that's a big kind of gauge for us in terms of seeing what EM Asia activity looks like in 2019. And finally, right now the markets expect 2 Fed rate hikes in 2019. It could be more or less, and I would pay very close attention to that because that's going to be a gauge for global markets in next year.
Ankur Patel, thanks for joining us, sir.